Hey everyone, this is Chris. Welcome back to the channel. So it looks like we were caught insider trading again. That's right, insider trading. It's always fun to talk about this stuff. Before you net though, if you're new here, my name is Chris, and this is to help you navigate and grow. So take a look at this. This is GOP Representative Stephen Buyer. He's no longer a representative. However, it's actually really funny. Someone named Buyer has to be charged with insider trading, right? So evidently he was a buyer. Basically, a lot of these cases, there was more than one. This is one of them. They knew about mergers ahead of time, and then they went ahead and bought. In this particular case, it was the Sprint deal, and he heard it on the golf course. And says, what happens, right? You kind of hear stuff on the golf course. Hey, I think there's going to be a merger. And then you buy stocks ahead of time. So we'll see if that ends up being true. But there are other cases involved in insider trading as well that were also interesting. In fact, there was one. It was funny. There was a guy who was training to be an FBI agent, and then his girlfriend worked at a law firm. And then they found out about this deal was that Pandion Therapeutics was going to get bought out by Merck. And kind of what happens is, right, if you know some company's going to get bought out, you're like, oh, buy the stock ahead of time. And then they get bought out, and it's announced, and it goes to the moon. And there was another one as well in New York. Doesn't say any particulars. And then some of this stuff was also happening in Silicon Valley. A lot of this stuff is with mergers or acquisitions. So it's essentially the stock's always going to go up because they're going to announce it, and then the price is what it is. So we'll see what that happens. This is a real thing, insider trading. So I just want to make it very, very clear. I don't like corruption. It's unfair. But people do get charged with these things. And also just to point out, if all of those people out there, because there's always people out there doing it, talking about Nancy Pelosi this, Nancy Pelosi that, if they're quiet on Stephen Buyer, there's a bunch of nonsense. So if we believe in these things, if people are insider trading, we should believe that all of it is corrupt, not just one side. I think that's a fair thing to say. And I think all of it's corrupt, and I dislike both parties. So I just wanted to point that out. But yeah, a dude named Buyer was charged with insider trading. Go figure. Robini, he was one of the economists that called the 0809 crash, the housing crash. However, this guy is kind of a perma bear. He's always saying the sky is falling. However, to be fair, the sky could be falling. He's saying that y'all be crazy if you think the recession is going to just be okay. He thinks it's going to be much, much worse. Mostly thinking about our government debt levels compared to our GDP is creating a problem. So we'll see. I'm bearish as well. I wouldn't necessarily call myself a perma bear. I just think there is more downside ahead. And, this is the big week this week. We got earnings, and we're going to see what the Fed says about interest rates. I still think it's going to be 75 basis points, but I wish they would do 100. We got to get inflation under control, and also I've been telling you guys as well, unemployment needs to go up. People need to lose their jobs. I know it's not nice, but that's just how it's got to be if we want to really fight inflation. Now, there is debate on Wall Street. Morgan Stanley and JP Morgan are split. Morgan Stanley thinks the Fed will raise interest rates yet more, whereas JP Morgan's like, well, eventually they're not going to. They're going to ease off a bit. Economists are kind of thinking maybe middle of 2023, the Fed will start to lay off the raising of interest rates. That's just what projections are in terms of inflation and what they need to do. So we'll see. It's a wild week in the market. There's no other way about it. If you do, though, take a look at what we're expecting maybe on company earnings. So for me, the reason why I'm not super, super bullish is because, why would stocks go crazy from here? What would cause that? If you take a look at sort of companies and earnings estimates, there's been a lot of downgrades. You can see this. There's been an increase in downgrades, and I just don't know why things would be bullish. Now, to be fair, right, you do want to buy low, sell high. But if you look at PE ratios that we talk about many times on this channel, for them to become more reasonable, remember, PE ratio is the price of the stock compared to the earnings that the company makes, right? You either need the price of the come down of these stocks or earnings to go up. And I just don't see companies reporting spectacular earnings. But this week, we're going to find out. Also, too, a big part of what is sort of how companies are going to make money or our economy is what are consumers doing. 7% of our economy is basically consumers, basically people shopping. If people are shopping, if they're going to Nike, if they're going to Starbucks, if they're going to Macy's, all these things, then companies can make money if they're buying Apple, et cetera. As of now, this is sort of what consumers, what they have in their bank accounts. People over 188,000 are doing okay, as you can see, but other groups are starting to struggle. And in fact, the group that's struggling the most in terms of how much consumer debt they're taking on is people who make between around 78 to 125, which is kind of the upper middle class. So they're starting to take on a bunch of consumer debt. And I'd love to hear your guys' opinion on that, if you have any reasons why that would be. So evidently, people are still shopping, but they're just taking on more debt, which obviously is going to create some problems. The other thing is too is when people who are saying are mega bulls and saying, you know what, the stocks only go up, et cetera, et cetera. Well, Apple is one of the key stocks on the market, and this is a chart of sort of Apple's growth. Okay. And the question I asked for you is, you can see it clearly that Apple had pretty good growth in 2021. You guys can see it for yourself. But why would they grow from here? And this is sort of what I've been talking to you guys about. When you buy a phone these days, do you really need to upgrade every single year? Do you need to upgrade a computer every single year? Now, to be fair, I think the new Macs are spectacular. I got a new Mac myself. I think they're great. And for me, I like to have new computers. But to be fair, most people don't necessarily need their Mac for productivity every single day. Most people are honestly just doing spreadsheets and Word, which is totally fine. If you're into graphics or video editing, those kind of things, you do need to upgrade, but not necessarily all the time. Phones, you don't really need to upgrade, to be perfectly frank. I'd say these days maybe every 3 years would be okay, but you could even go theoretically 4 years. Phones are really good these days, and these things are hurting Apple's growth, as people don't need to do this so much. So that's why they've been introducing a lot of subscription services, be it their Apple TV and even like Apple Watch has a subscription to like the health thing and stuff like that. I don't actually know how the subscription of their health or music are doing, and that's I guess what we'll find out. I do expect Apple to slow a little bit. We'll see. One of the things that was interesting is that there was an article that came out that Apple's actually having a sale on iPhones in China. It's going to be like the end of the month, like for a couple days sale. They're going to put about $75 off these things. They usually don't put iPhones on sale. That's just not something Apple normally does. So that just means that maybe demand is lower in China, and they're trying to get people to buy. So that's going on with there. Squarespace, we talked about it yesterday. It turned out their earnings weren't so great. The stock took a hit, but the basic gist was that they're not so rosy for the rest of the year, essentially, for the next couple of quarters. So Squarespace isn't necessarily one of our bigger stocks that move, but it is a tech stock and does represent consumer, and also represents whether or not people are essentially building websites, which is a lot of small businesses. I myself have showed you guys before. I use Squarespace. I like Squarespace. It's a good company. But there are other choices out there, and I think one of the things that I want to mention is that a lot of these companies will post, interesting or really good earnings during the pandemic, and have certainly slowed down now. Weber is one of these, or Weber, I guess you should say. There's the grill company. So basically, there's a couple of companies that were silently very, very good the last couple of years. Was like Winnebago, the RV thing, because people were outdoors and they were living out of their house essentially, and barbecues because people didn't want to go to restaurants, or not say didn't want to, couldn't go to restaurants because they're all closed, so they're cooking outside in the open air was more safe from COVID. But COVID is sort of like causes the spike in barbecues. But how often do you buy a barbecue, right? You buy a barbecue probably once every 8 years, or maybe you buy a barbecue once for your new house, and that's it, you're done. So it'll be tough for maybe a stocks like Weber to come back. I'll be curious what you guys think about that. But there was massive sales during the pandemic, and then now it's just everyone's got a barbecue. There's not how many more do you need, right? The other thing too, it's kind of interesting that represents the streaming wars. The NFL now has NFL Plus. I don't know why we're calling everything Plus. I think we should go with like NFL Star or NFL Smiley Face or NFL question mark or whatever. But it seems like these days every streaming service is Plus. And if you guys have an opinion on that, if there should be like another way we should talk about these, maybe like, why don't we just call it NFL Stream or NFL Ring? I'm making jokes. But yes, NFL Plus is a thing, $4.99 a month. I think this hurts something like a Fubo TV. They were trying to do their own thing. And there's going to be so many plus services out there. We might as well just bundle them all together and call it cable. That's essentially what it is. Another thing too related to that, the phone companies had a really interesting thing is that, unfortunately, the phone companies have been struggling. I had mentioned these as being one of the stalwart stocks, okay? And I was wrong. I was wrong in the sense that people do keep their phones, right? I was right about that, but I was wrong in terms of people pay their phone bills. So this is the one thing that it's a real thing. So kind of what happened is that the phone companies, it's hard for them to grow. And what AT&T did, I thought was really interesting. They basically try to get a bunch of their customers that were on the what do I want to call it? The prepaid plans, as you don't need credit checks or anything like that, and move them over to the sort of the recurring payment plan. And some of the people, they just couldn't afford to pay it, and they quit paying. So that was kind of I don't know if a mistake is the right word, but it was a way for AT&T to fudge the numbers of their growth by putting people on plans that they shouldn't have had. So I'm just curious what your guys' thoughts on that. And I read that and I was like, okay, that makes sense. But I don't think the phone companies are going out of business. However, they're all competing with each other, and so what they're doing, they provided too many like free phones to people to try to get them to switch plans. And I'm sure you guys know as a consumer, you just take that free phone, you switch plans, and if another company gives you a free phone, you switch plans again. Like us Americans, we don't really have any loyalty to our phone companies. That's just how it is. And if you guys disagree with that, if you feel like, you know what, I love my phone company, I'm sticking with it, I never changed, I'd love to hear from you. But for me, I have no loyalty. So I admit right there, when it comes to phone companies, I have no loyalty. And then the last thing I want to mention is the share to P ratio. We're still trading at, I can see here, 29, still very, very high. So remember, historically, we trade around, say, 17. When the PE ratio, the share to P ratio hits around 25, I think when stocks get interesting, not cheap, but at least interesting. So I see more downside ahead myself. I just don't see why companies would report massive earnings. The only ones that theoretically could do it would be the energy companies, because oil companies just seem to be making money. And you know, if I could predict the price of oil, I just don't know. Oil's always a tricky one. I know the oil stocks are pretty good because in terms of like their P ratios, they look good, they pay dividends, et cetera. But exactly what oil is going to do, I can never tell you for sure. The other one that's been interesting as well is tracking gold prices. You'll get different opinions on that. Lately, gold has been going down, which is kind of interesting. And what to do with Bitcoin. Bitcoin has been crashing as well. So our market, I mean, I'm just keeping it real with you guys. It doesn't make a lot of sense. I mean, it makes sense in terms of being companies that make money at reasonable prices. I mean, I get that. But the way that things react on a day-to-day basis is just insane. It's just so much volatility just because there's a lot of people trading in and out of stuff. And my best advice, you know, these days is just have some cash on hand. If you are going to be investing in the stock market, buy companies that you believe are going to be around, your Procter and Gamble's. And I think Apple's fine, but you know, just be prepared that there might be some downturn. So I wouldn't be throwing all your money in the market. I just don't think there's any reason to, in my opinion. And so that's why I'm more dividend stocks. When you look at something like with Squarespace earnings, they're kind of predicting flat. And so it just seems like although Robini is saying like crazy crash can happen, I'm not sure if the crazy crash can happen, but I do think it could be slow bleed out. Like, you know, as I point out to you guys before in the charts, after dot-com bubble or 2009, you have like a 10-year period of the market's just kind of flat or down a little bit, but not like anything crazy of, you know, double-digit returns the next 5 years. I just don't see that happening. And I hate to paint a grim picture, but I want to keep it realistic with you guys. And also, too, so you understand that the market isn't random. We're all watching what the Fed does and what the cost of money is, and we're watching if companies are making money or not. We're watching whether or not consumers are buying things or not. And this is sort of how you get good at the market, by understanding what drives it. And so hopefully all these daily things are helpful for you. Love to hear your thoughts on all of these things. And I'll leave this with this last question. Are you subscribing to NFL Plus? And you know, do you know anyone who is into this stuff to where they really like sports enough to where they would actually start to get all of these additional services? In this household, we're cool with Disney, we're cool with Netflix. I don't work for these companies. I'm just saying we're cool with these. But when you start adding in, and you know, Paramount Plus is fine for Star Trek. But when you start adding, there's like a whole bunch. You know, like Apple and Hulu, and now you're talking about NFL, and I think even you know, YouTube's got stuff, and it gets to be a lot. And I think for a lot of us, we're just like, okay, just bundle it all together. We'll pay one bill and we'll go back to what we used to do. So that's my opinion on that. I will say, though, to be fair, I think a lot of the young people, you know, myself included, we watch YouTube these days for entertainment and information, right? So, you know, the streaming services have a lot of competition, same with TV. And in fact, you can get better information sometimes from alternative sources. That's why you're watching this channel. So thanks again for watching. I do appreciate you watching. I think the world is constantly changing. And, you know, we'll monitor these things together and do well in the market. So thanks again for watching, and I'll catch you next time.